remember wearing straight leg Levi's, plain shirts even when they weren't style. I remember singing with Roy Rogers at the movies when the West was really wild.
The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, we're going back here to the Diagnostic Trading Hour, and let's check out where the markets are at right now. We got the S&P. It's currently down 4 points. We have the Russell down 12.5, NASDAQ down 31, and the Dow is down 12. Pushing on those highs that have become lows and trying to break on through them to break on back down. We've got that resistance now support level on the daily bars. So we may check that out here in a little bit. We got copper right now. It is down a little over 0.5%. We got gold currently down about 30%. We got silver is down 1% on the day. Natural gas is currently up 1.75%. Nice big move there on natural gas. Oil not moving too much, up about 31 cents on the day. Natural gas having its inventory report out today as well, so we'll take a look at it. We got corn is up a whole $1.50, nearly nothing going on there. We got soybeans up $11, nice move, almost a 1% move on soybeans. Euro dollar is currently down 46 pips. Aussie dollar down 27, pound dollar down 40. Euro dollar, we had the ECB interest rate. We had a couple of news trades we talked about on that, so we'll go through and look at them. We got the dollar franc. We got 54 pip up move. Dollar CAD 20 pip up move. Dollar yen 22 pip up move. So across the board, dollar showing strength against everything else. King dollar leading the way as the indices fall, the dollar rises. Looking on over at Aussie yen, we got Aussie yen is down 19 pips. Euro yen's down 49. Pound yen is down 34, and Euro pound is currently down 13 pips on the day. All right, so let's check out. We had a few different news possibilities for today. So let's go through them. I talked about these earlier this week and yesterday. And I just want to walk through each one of them with you real quick, and we'll review those. Last night, there was the Aussie report came out on the retail sales. I was looking for an iron condor. I really didn't find one. There were some good trades, but as far as just the iron condor itself, I just didn't really find the pricing. Maybe you did, depending upon what time you got in. But when I finally got around to looking at the chart and checking it out, really just didn't see a whole lot there. And here, let me load something up real quick. All right. So on the Aussie, looking for about 40 pips of movement, within the time frame of when the release came out. And the release came out last night. I want to say that was 8:30 when that news report comes out. And yeah, about 8 o'clock, 8:30 right there. So looking at the 8:30 p.m. release. Back out and move on over here. Here we go. And zoom right back in. And, see what kind of move do we get? And what kind of move do we expect? So, well, from the 8:30 release to pretty much the low, right over here, we got about 33 pips. So it stayed right within our expected range of about 40 pips. It would cost you about $20 to put on a strangle. So you've been hard-pressed to make a lot on that trade. I mean, you would have made about 50%. So if I guess you go 50%, it might have worked for you. The problem is you can only get about $20 for an iron condor also. So for the 11 o'clock even. So due to that fact, no trade on that one. But there was definitely plenty of volume, plenty of trades that you can take advantage of throughout the evening on the Aussie. Had a great reversal trade right here after the report came out, flew down, volume exploded, didn't break the low, turns around, moves back up. Great reversal trade around the expectations. and really, sets up for another potential reversal to go south right over here after it moves on up with all that volume and comes on back down. So there's a lot of great trades on the Aussie last night. Just the Iron Condor was not one, and we weren't able to grab it. Rolling on over then to this morning, we had pound PMI. So we'll go check that one out. Let me roll on and we'll pull up the pound dollar. And they've been going through all their little reports this week, but we've got like manufacturing, and we got construction and services, and all the different PMI reports that come out during the week. And they released all three of them back to back to back. And so if we go over here and we look at the report from this morning, again, it's a report that we don't expect a lot out of. And let's check out what we got on the trade. So right here, we got to move from about 4:30, and then if you're pulling up to the 7 o'clock, the move we got was about 43 pips. And we usually expect about 30 pips on the move, and we're looking to get ideally around $50. So if you're able to pull off, somewhere between $30 to $50 on that trade, the most important number for you is really where it ended and how early you got in. And the one caution I had on this one was sometimes it'll be a little bit early, but 38 pips. If you would have got in really early, the thing really did, take a little bit of a move. If you got in like back here at midnight, then, and you got your 50 pips or so, you pretty much broke even, somewhere between, your 40 to 50 pips. So trade is sort of, it was okay. Wasn't our best one out of the group, but that's okay. You shouldn't have got hit on the trade. You just probably didn't make much of anything on it either. Now let's go here. Let's check out the euro dollar. Euro dollar, we had an Iron Condor first thing in the morning out of the gate. Before the interest rate announcement comes out. And I'll actually do it into the interest rate announcement where it expires at 8. I want it before that press conference. That's what I'm scared of, the press conference, okay? And so if I go in here and look at this, and I look at an expiration of 8 o'clock, and I go, okay, well, what was it at 6? Because that's when I get in on this trade. 4-pip move, okay, from close to close. And if I go into my measure, like that to the low, hey, it went down 27, it went up 27. But, I mean, this thing is usually flat, like dead flat, close to close before the ECB rate announcement. I've done this trade several times over the last several ones, and it's worked out excellent. Even at just $30, trade works out great. And so you should have been able to get that one on. Let's see here. And even if you had to leg into the thing, you should have been able to get it on. And next one was looking at a potential strangle on euro dollar. Euro dollar did have a nice move. Right as soon as the 8 o'clock comes out, that's usually when you're looking for an entry into the strangle on the euro dollar. And so that's going in and looking at now. This is the press conference part, okay? Which usually starts at 8:30. That's when things start going a little bit haywire. So if you hopped in like right around 8 a.m. before everything went nuts, okay, right around 8 a.m., you got to move up. We got to move up and down, which makes this one a little bit trickier. We got to move up about 37 pips. Then right over here, then we got to move down. If you're looking at the 11 a.m.s, of about 75. So most days, I would focus on the 10 o'clock. That's usually I'd say my preferred expiration on it. It usually will be enough. If you chose the 10 a.m.s, then the lowest you really got over there was about 60 pips. Maybe 55 if you held it. But if you could get the trade on for, a 1-to-1, and that's the trick, is you need to make sure that you're 1-to-1 on this trade. That's how you know whether or not to do a condor or a straddle. So if I risk $40 on the trade, let's just say it's equal, $20 on each side, okay? If I risk $40 on the trade, then what I know is I need to make, okay, where would I be break even? Basically, I'd be break even 40 pips up from the center of the straddle, okay? Because I'd make 20 pips and I lost 20 pips on the other side. So at 40 pips up, I'm break even. Well, if I break even at 40 pips up and I risk 40 pips and I want to make 40 pips, then it's going to have to go up 80. So to lay that out for you again, right here. So if we get in like right here, And if I just clean off everything off my chart for you, okay, just make it super clean except for I want my toolbar right there. And if we look at getting in at 8 a.m., so like right here, okay, if I have a 20 pip risk, so if it's at 770, so if it's at say 790, and I do the one below that, so 750. Okay, so I have a 20 pip risk on the upper one and 20 pip risk on the lower spread. Well, if it moves, if the market right here, if the euro dollar moves up 20 more pips from 37.90 here up to 38.10, okay, I'm at break even. Because, why? Well, I lost 20 pips on the one I sold. Remember, I sold this one down here. I was going short right here. It's talking about a straddle. And I bought, this one up here. Okay, so I sold here and I, bought there. But at 8 o'clock. So right here. And so if I sold this one and the market went up, that one loses its $20. But this one has made $20 on a 20 pip, or the euro dollar's moved 20 pips higher than where I bought it. So it's at break even. And the reverse is true. If it goes down here and it goes down 20 pips. So if my 20 pips is 37.50, then down to 37.30 basically right there. That is my break even point. Okay, so these two arrows are my break even. What is that? That's 40 pips above because the $20 profit and the $20 loss and 20 pips above where I bought. So it's 40 pips above or below. So I have a $40 risk, and I don't start making any money until the market's moved up 40 pips. Therefore, to actually be profitable at a 1-to-1, I need 40 more pips above this level to make it. So I need to expect basically an 80 pip move. And we got close. We got about 75 pips. And if you held on to the thing, it expired at around, like let's say you got the 10 o'clock, it expired like at 65 pips. So you would have made $25 on the $40 risk on the trade. Okay, it's not bad. Not desired, but not horrible. But the reason I do that is if I know what my break even is, and I know what my 1-to-1 is, okay, look right here and right here, then I instantly have all the data I need for whether to choose an iron condor or a spread. Because if I think it will finish in these break-even zones here, so go over, we'll just make this like that to make the line stand out for you. If I think it'll actually finish in that zone, inside that green area, that means I'll be profitable on an iron condor. Okay? If it finishes inside that green zone, that means I will lose on a straddle. So what is my expected move? And then what I look at is I go, okay, well, for every tick outside of it, I'll lose $1 on an iron condor, and I'll make $1 on a straddle. So which one is better? And that's where you want to know your stats and your numbers, and that's why I read them all off to you, so you have those proper expectations on different pairs. All right, stay right there. We'll be back right after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pesamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. And just going over some new ideas and things with you, making sure you understand the straddles and the condors. And what I want to teach you is just how to look at both of them simultaneously at the same time. They both will have basically the same break-even point. I mean, bid-ask spread varying, but basically the same break-even point. Okay? So your one-to-one win would require it to move that entire distance for you to have a one-to-one, reward for your risk on a straddle. A one-to-one loss on maximum loss would require it to move and stay. This is important, okay? On the straddle, it moves and you take profit, because it doesn't matter if it moves that far. If it comes back, you don't get to keep it, right? So on a straddle, you have to take the profit, because it goes up and it moves one-to-one and it moves back. You gave it all back, doesn't matter. So it requires it to move there and it requires you to take profit. An iron condor would require it to move that far and stay that far, or you exit when it goes that far for you to actually suffer that loss. So if it goes that far and comes back, you don't suffer that one-to-one. So if you would have done, let's say you could have got both of these on for $40 either way. Again, I know there's a bid-ask spread in between, but just to make the example easy. And let's say it finished about 20 ticks outside that break-even zone. Well, on the straddle today, you would have, say, made $20. On the Iron Condor, you would have lost $20. Okay? But Iron Condor is much better than butterflies because you don't have the all-or-nothing aspect. And straddle is much better than strangles because, again, you don't have the all-or-nothing aspect. It just works a lot better. It's a variable payout, like a normal option. And if you can just figure out this price where you buy, where you sell, and therefore what would the break-even point be on the upside, what would the break-even point be on the downside, and then you go, okay, well, now let me add that many ticks of total risk to the upside and downside for that 1-to-1, and then boom, straddle, strangle, same chart, all at once. Very, very easy for you to basically look at and do. And that's all there is. It's that simple. Watch out. Check out some of my other shows that I've done previously. I walk into it in a lot more detail for you. But for those of you who've watched a few of them, if you can get this concept down, it'll take you another level on doing these trades. Let's see. Let's check out the euro dollar. And pull up. Let's see. We'll go back over here. We have that trade. Okay, what do we got? I'm going for tomorrow. Oh, we also had ISM. Okay, forget about ISM. That was another trade I went over. That's also a euro-dollar trade. This one was a 9 to 11 trade. It barely ever breaks 50 pips between 9 and 11. Let's see. Did it do it today? Did it break the mold? What happened? And so if I go in and I measure 9 to 11, 42 pips. So if you got that 50 pip, you're good. If you got less, it actually did break it. It broke 56 pips. So this will be the second time in 12 months it broke 50, but it didn't stay past 50. It did pull back in. So, if you got 30 to 35, maybe $40 on the trade, I realize looking for closer to 35 or 40 on the trade, as I talked about yesterday, then you may be down a couple bucks. If you pushed it and you only got like 25 or 30, you didn't do what I said, then, if you did 25, then of course you'd be down 17. So you wouldn't have got killed either way. But, big move. It just it kept going pretty strong. Now, personally, okay, on this trade, this morning I took this, I went short quite a few spreads, and I was looking at expected volume over here, okay? And I was watching the expected volume as it was breaking up and down and going berserk. And I saw the market break up on expected volume, but not break the high. Then break down on expected volume. Didn't really break the low, but I was just looking at all the action, the spike up, the spike down. I'm like, I think this thing's coming back down. I'm going to wait for it to break down below low. Doesn't do it there. Does it here. I'm like, okay, I'm going short now. Took me a minute to get short. I didn't get short right away. So it popped down. I was like, I want to go short. Came back up, and I'm like, okay, if it breaks back down here below low, we get that one more. We get this little down close. It's not really a great down close. It's sort of a horrible, doji there. But I'm looking for any excuse I can find to hop in and go short on this thing. And so we got the down close there with the high volume. Then we got another down close. Didn't have high volume, but I'm like, I'm in this thing. I finally got in the trade right here on this breakdown, and then it took off. And grabbed a nice little chunk there. So I got about 50 pips out of the trade. But just using volume on it, just because you can't find the trade before the news on the condors and the spreads doesn't mean that you can't use the volume to trade after the news directly on the spreads or the binaries. And I was trading the boomerang strategy here using spreads this morning right off the news, and it worked out great. All right, I'll stay right there. We'll be back after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. And again, we're going through this step by step, looking at your dollar, looking at the different pairs on this one. That one should, worked out okay. So, but if you'll use these, if you'll put these pieces together, I was talking to a trader this morning, and I was like, hey, did you get on a trade? He's like, nah, I didn't really I haven't quite figured all that stuff out yet, but he's a great directional trader. I'm like, well, why are you going short? He's like, well, I really don't know how far, if I should expect it to keep moving. And I'm like, dude, we have an expectation of this many ticks. It's still got plenty of room to move. And so that was part of my reason why I wanted to hop in this thing and go with it, is I had that expectation. Plus, I chose like an at-the-money spread with like no break-even distance, and, it was like $30 risk on the spread, $70 prop potential. I think I had 15 left that was right down at the very bottom of the move. And so, just kept bouncing, by the way, over and over again. And finally, I was just like, all right, I just got to take this thing off. But check this out right here on the deviation levels on the day. I mean, perfect. Move right there. Literally just hitting over and over and over again. Let me get rid of these drawings. They're sort of overwhelming. And right there. Look at this thing this morning. It's just deviation level. Just boom, bump, bump. I mean, it's like a ball just fell down and just bounced and just slowly rolling across the floor right on that deviation move. And popped on to 0.7 and pretty cooked for the day. So, anyways, that covers, we got through the retail sales, we got through the pound, dollar, services PMI, we talked about the ECB interest rate release, we talked about the ECB press conference release, we also went into the ISM non-manufacturing PMI. The one other trade we got that we can check out is natural gas, so the storage inventory report. So let's go over and check out natural gas. So starting to look at using these expected volumes, expected ranges, playing with those on the natural gas inventory reports. And if we go over to it, then we'll pull it up over here. And now let's add on expected range. And I'm going to add on a few of them. Okay? So I'm going to add on one expected range, another expected range, and another expected range. And I'm going to do one for 30 minutes. I'm going to do one for 60. I'm going to do one for 90 because the report comes out at 10:30. And let's look at it and see. Now, what happened on the report? Let me pull it up and let you know the exact numbers. On the natural gas release this morning, we had natural gas storage came in at a negative 74 billion British thermal units on an expectation of negative 75. So a whole lot of nothing, really. And so what do we expect on that? Well, we expect a whole lot of nothing. So the market, what does it do? Does it actually move, though? Yeah, we got a big move. We still got a big spike, just not as big as one might expect. So since I know that, now what I'm going to do is I'm going to grab and get rid of the 60 and the 90, back it on down to the 30 right here. And it lets me see sort of this hour, next hour, and what do we expect. Remember, this is the same time every week. So when this report comes out, I mean, it's always coming out, I mean, except for with a few exceptions of holidays and stuff, it comes out on Thursday at 10:30. And if we look at the release, we go to the high right there. We got about 84 pips. The average expected high, and we had it extremely low. Volume. Let me actually move one more thing over. I need to update something I just now noticed. Let's see here. I'm like, that cannot be right. Let me pull up. Yeah, I was like, that chart just looks pathetically impossibly low in volume. And that's because it is. Let's see here. There we go. That ought to look a whole lot better. For volume, I'm like, I'm getting some move, but I'm not getting my volume that I need. And there we go. Okay, so that's a little bit better. Now let's go back over. Let's look at this release. And interesting, it actually went the other direction. So I was looking at the April versus the May contract. But anyway, so same time, same release every week. And really small move, but it was right. I mean, we didn't have the expectation. But what you can do is you can go in here and you can look at this report. And, I mean, there's my high volume. And watch what happens. It doesn't break the low. Okay? Got a low of 43.61. Got a low of 43.62. That is a reversal trade. Okay? High volume down bar. Boom. Does not break the low. Goes the other direction. Buy. And, I mean, that right there, I mean, that is a buy trade. And it's, look at that. Went right on back up. Could not break that low with exceeding volume. We got the initial spike. What other trades could you have done on the trade? Just looking at the expected move, you could see, okay, what is the expected move? What is my cost? And easily, on these natural gas inventory reports, you can go and you can get on some great iron condors. I did one the other day. There wasn't even natural gas storage. It was just a day in natural gas. And just another regular day. And you can go in there and you can put on an iron condor right before it. Or if it's just stupid cheap, you can put that on too, looking for a move in either direction. And you can look at, how far does it usually move? and by what time, and you can get more specific on this. You can look at 30-minute. You can go, okay, well, 30 minutes good. What about if I wanted to look at, 2 hours, okay, or 2.5 hours? Thing goes to 2:30, right? So report comes out. Let's make it further. So 10:30, the thing goes all the way to 2:30. So 10:30, we got 11:30, 12:30, 1:30, 2:30. That's 4 hours. So what I'm going to do is I want to go, all right, so that gives me 240 minutes, and I want to start it 30 minutes later. And so what that ought to do is ought to give me the plot for basically 4 hours, taking it, we may have to play with the numbers a little bit here. It'll just push out. And until we get it exactly where we want, so let me, let's make this a little bit further out. We'll get it there. And, okay, so where is it plotting for? It's now 8:30, so let's make it, we want it to start at 10:30, so we need 2.5 hours. So I'm going to need to delay it by 150 minutes. Okay, that ought to line up for me. There we go. 10:30 to 2:30. So that's basically what I have right now is my max expected range on it. And we really didn't have any move. Now, obviously, I wouldn't expect this expected move today because the inventory report came in, basically right at expectations. There was no fundamental shock there. But now I can see it now. The previous 2.5 hours, I can see that move. That move was perfect. So it was right on target. So right there, see it moved right on up. And the big growth of 75, almost hit the 100% of expected move in the last couple hours. Then it pulled on back down a little bit. But so I can use these to line up. I can also use them for things like corn, soybeans, to line up with those markets and the way that they trade. So we go over and look at, like, say, corn. And make sure I'm on the right months on corn. I believe I am. Yeah, so we got May right there. And then I can go over here on Nadex. I can pull up, and because there's a lot of ag reports that come out. We had a couple last week, and I can go over to their markets. I can go to their commodities, and I can click on their agriculturals, and go to contract specs. Go in here, find the ags, and then go, okay, what hours do they trade? They trade from 10:30 to 2:15. Okay? All right, so I want this thing to end at 2:15. I like the 10:30. I already got that number working for me. Now, I may have to adjust it a little bit, but so we know we're going to take 15 minutes off this. We're going to take this down to 25, and use a Ninja Trader here. And then it's like, okay, we're getting close. Not quite there. Where am I starting at? So what I'll do is I'll look at, okay, where am I starting? I'm starting at 11, basically almost 11:30 here. Let's go in and let's change that to 1 hour off of that. So at 150, let's go ahead and make it 90 minutes. And then now I ought to be able to get basically a 2:30. There we go. So we got my 10:30 now to 2:15 expected move on corn. And perfect setup, perfect layup. Couldn't have asked for a better trade. Came on back down, hit settlement, broke the 75% level right here, pretty much right at the 100% move. Let's see, we're like ticks away. So 5 versus 5.25, 1 tick away from the expected move. And this is for this day of the week, not just for any day, but for this day of the week. Only 1 tick off the expected move. We have an exceeding volume down bar. And then immediately followed by, this is just perfect setup. It comes on down, exceeding volume up bar, then down bar, nothing happening, coming back down, another exceeding volume up bar. Finally, it breaks it, so you could have got in here. And this is definitely a trade for you right there. Easy profit trade. As far as this one going right here, let's see what we had. We had down move. I don't think we broke the low. Did we? Low. Yep, didn't break that low. Finally, we got another exceeding volume bar. We broke that low. That had been pushing it. So why is that pushing it? You're pushing it right at that 75% mark. Really, your best launches, okay, your best, phase one of what I call boomerang trading, best ones are going to be out of the gate, past 100%, okay? You got to be careful on that 75% mark because you can easily get some fake outs. It's sort of cool But, be careful right in the beginning of that on that. Just be aware of it. I'd rather get it early or past 100%. Right between that 75 to 100% level, that's really where I'm expecting that reversal to take place. And it does. So, could have went on that one, but you would have been doing a little early. I really want all my phase ones to be in that first 50% of the range. Okay? And so I could even add on, the same indicator twice and put on a trigger on there if I wanted to. But I really want them to be within that first 50% of the range. Once it hits 75%, then I'm really focusing on my boomerang reversals. Boom, they pop on back up, and easy trade. So it would have been nice to catch this first one, but we didn't catch it on that. I'm trying to see if there's any other setups right there. And let's see. Now we ran up, so let's look at the flip side. We ran up here. We got back up to 75%. Do we get anything? Let's see. Yeah, that's nothing there. Starts coming on back down. I mean, we're at almost 100%. Let's see here. You got a short. Doesn't break a low. Doesn't break a low. I mean, I'm not really upset we didn't get one because it just oscillated, right? So no reason to force the trade. And moves up, but not really an up close, just a doji bar on that breaking of the high. And we're coming up on, we got about 45 minutes left. So really there was one solid trade. Like I said, that phase one needs to happen to that 50%. Didn't happen. And then we got the reversal trade at 11:30 and perfectly called that run up right there. And I haven't had a trade since, but one trade. I mean, but you know what? One good trade. You get 1, 2, 3 good trades on a market in a day. That's awesome. Throw on 3, 4 markets, even better. Okay? So that's corn. Let's check out soybeans along with it. And then the last part of the show, we'll just do a quick reminder and wrap up because we got tomorrow, we got NFP. I won't be here tomorrow. I'll be out in Denver. But just to, make sure everybody is all set and ready to go. I want to make sure I do cover it with you. All right, we got a call real quick. I want to take that before I move on to the next thing. But it looks like we have the exact same trade just as a wrap-up right there. Boom. Market pops right up. And perfect reversal trade. So, Mike in Dallas, right here in my hometown. What's going on?
Hey, Darrell. Two things. One, your webinar this morning was fantastic.
Thank you.
Second, I get real confused as to, what to trade. It's hard for me to go from corn to the E-mini back to the Dow.
Right, yeah.
My mind just gets all, and for somebody that's pretty new with your program, and I worked with, I've sold futures before. I'm just confused as to what I need to trade in order to graduate to trade other things, and what do you recommend? That's it.
Okay, you trading futures or Nadex? What's your main focus?
Nadex.
Okay, focus on Nadex. Okay, corn and soybeans, you're talking like 1 or maybe 2 trades in a day, and that's it ever. Okay?
Right. Okay.
So as a new trader, I mean, yeah, that's good, but you're going to be extremely frustrated sitting there for hours on end.
Yes.
And maybe or maybe not getting a trade. So I don't really recommend that for a new trader. Like corn is something I'll go in big because I only get one.
Right.
A new trader shouldn't be doing that. For activity as a new trader, I honestly point people to Forex first because you can trade day or night, any schedule. A lot of new traders obviously can't trade like during the middle of the day. And on Nadex, I'd say U.S. yen. So hold on right there. We'll be back, and I'll help answer that a little bit better for you, okay?
Thanks.
Yeah.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. And I got Mike on the line here from Dallas, here in my hometown here in Dallas-Fort Worth. We're talking about new trader, trading Nadex, trying to figure out what markets to trade, can't hop between 50 different charts, right?
Right.
Yeah, ags probably stay away from, okay?
Ags.
To begin with. Because they only trade from like 10:30 to like 2:15.
Right.
So they're not really trading that long anyway. You only get 1 or 2 trades out of them. It's an add-on. It's an easy add-on, but it's not like one you want to rely on. As far as indices, I prefer personally for new traders. Actually, any trader. I prefer my favorite's the Russell because it moves more.
Exactly.
If you're trading spreads, you're either going to hate or love the NASDAQ because it ticks really large, so it has really low leverage. So you're going to make or lose like $10 on the trade, which can be good for a new trader.
Yes.
Now, the S&P has a higher leverage, along with actually corn and soybeans on the spreads. So, like, in a 5-point move, you'll make or lose $50 on the S&P.
That's right.
On Nadex, but you'll only make or lose $5 on the NASDAQ on Nadex. Right. So, if you want more leverage, you go with like the S&P. If you want less, you go with NASDAQ. If you want in the middle, you do Dow and Russell.
Okay. Excellent.
And so those would be what's to focus on there. And then on the FX pairs, stick to the dollar-based pairs to begin with, and look at like dollar-yen. I'd say that's probably one of the easiest, simplest ones that has movement around the clock that you can focus on.
Excellent.
Euro-dollar is where everybody goes. But it also can be crappy because that's where everybody goes. Right. So it has a lot more chop, and at night, like, it has nothing happening. Okay. So I'm now, as you get more advanced, you're going to add on things like pound yen, euro yen, dollar cat, dollar franc. Those are actually good instruments. They don't move as much. They're sort of like corn and soybeans don't get as many trades, but you can get some nice moves, nice smooth moves. But a US yen, I think, is the perfect place to start on your FX. Okay. I'd probably look at Russell on your indices or DAX. DAX is the smoothest of all of them.
Yes.
That's probably the smoothest one. So DAX or Russell if you like the volatility. If you want a little bit smoother, but want good layout, DAX. So probably say DAX then Russell. US yen on your FX, and then on your commodities, DAX and then Russell.
Okay.
Yeah. So if I was picking one, I'd say pick DAX because it's so much smoother. And then US yen, there's a lot of strikes. The premium's low. It's great for the binaries as well. And then for your commodities, avoid silver, avoid copper. Obviously, I said, corn and soybeans, do that later. The last, natural gas, avoid that till you really are good at reading volume. Okay. And that's only a 1 or 2 trade a day thing on natural gas because it's nuts. Right. That leaves you basically with gold and oil. So, and gold can be awesome and can be nuts. Oil can be really good, actually a good chunk of the time, but it has a lot of volatility built into it in the spreads and the binary because it's just a very volatile instrument naturally. Okay. So, I'd say your next thing to tag on, start off with DAX and US yen, then maybe work on adding on like gold or crude, and that'll give you like a starting point.
Excellent. Thank you so much, Darrell, and have a good trip to Denver.
Hey, man. Thank you. Thanks for calling in.
You bet. Thanks.
You bet. All right. So, anyways, thanks for joining us today on the Diagnostic Trading Hour. And don't forget, we got NFP. I did go over the numbers yesterday. So go back and watch the archive, and you can get those right off of the show. All right. Y'all have a great day. And I will see you Monday on the Diagnostic Trading Hour. Stay tuned. We have another great show coming up for you right after this. Also, check out Tommy O'Brien tomorrow morning on the Bull Bear Binary Hour at 9 a.m.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.